Hello everyone, this is John from Baro Finance. Welcome back to our channel. We are with you on 14th of January intraday analysis. On the last trading day of the week, we will just cover some news and then we will just go ahead with our charts. First of all, the data released this morning from UK was all positive. They just released a trade surplus. Everybody was expecting 2.7 around 2.7 billion pound and deficit in November, but it didn't happen. And they have just released a 0.6, almost like a one, not almost, but more than 600 million pound trade surplus. That was good because they have just raised their exports more than their imports. That was the good news for UK economy. And also like their 3-month average GDP growth rate was 8%. Expected was only 7%. It was also more than expectation. And the other thing that was positive one, and the other news from Germany. So Germany was disappointing for me. Actually, it was just released as 2.7 growth in 2021. But let's just look at the previous year. The previous year on 2022, on the first year of the pandemic, and contraction was 4.6. So after that big contraction, and everybody was expecting something like at least 3.5. The consensus was 2.7. Just came in the line of expectation, but many analysts say, all right, they just so pessimistic. That's why like they are just putting their expectations so low. But yeah, they were right. It didn't happen. In Germany, we see a lot of problems with the energy crisis, mainly affecting the production. So they are just breaking, and then they're just waiting this energy crisis to be over with Russia and some other countries. Otherwise, we will see a recession in Germany. Actually, like not a recession, but a slowdown in the economy. It's also possible, and this is also expected as their old population is growing year by year. Spending habits are decreasing year by year. If you just check out the sales of new cars, that's the main driver of the market. And then German people are obsessed with their new cars. It's declining, so that means like old people don't buy new cars. That's not something a new info. All right, that was the news. All right, let's look at the numbers, the charts. All right, we are on the chart of Bitcoin. As you can see here, it just gave some hope to people. Like when it just like go to 44, and then it just like a declined again. So they said, all right, this is not the right time, and then so it will just speed up again from the lower levels. The critical level is the 42 is just right now being stretched by Bitcoin prices. The reason is the expectation, the dollar indexes has been on really low level right now. Just imagine, on dollar index was when the dollar index was 96, Bitcoin was trading at almost 50. And when we just see that the dollar index just lowering, and it's now testing 94.7, and like it should go up, right? Like there's a reverse correlation. Like when dollar index goes down, like Bitcoin price is high. When dollar index goes up, the Bitcoin price high. Right now, both of them are down. Imagine the rebound of dollar index starts in the next week. Why I'm saying the next week? Because on 24th of January we will just receive on 2025, 24 and 25 Fed meetings. On that meeting they will speak about tapering, they will speak about rate hike and everything. When we just hear that those news, we will definitely see dollar index rebound. That's the most probable thing because it cannot go lower than that one. Otherwise, we will see some recession in market. All right, that was the news. And as you can see, I'm always saying below 50,000 Bitcoin is risky right now. It is testing that one. And one important thing, let me just show you. When Bitcoin makes a pin, then it tries that pins later. You see the needle pin, and it has made a needle here, and we may see in the coming days it's testing this level again. This is not the only time it has made these kind of things. A lot of times here you see it has made, and after some days it just went lower than that one. So it just made this one not for just something. In the coming days it will try this pin, it will just go lower and complete that one. All right, let's look at natural gas prices. That's also interesting story.
You are ready to win with us. GAN Market.
All right, on natural gas, the prices has went high and then declined. So the reason when we just dig into that one, we have seen that Russia didn't allow on any platform to trade natural gas. I'm saying the natural gas produced by Russia. So when there is a problem like this, so people just switch on US natural gas. They have bought those contracts and then it just jumped to prices. But this happened between 10th of January and then 13th of January. So when people are just realize that, all right, Russia is just starting to just trade, allowing the trade natural gas, LNG and other contracts. So the prices went down, and it's just like a curve, something rising fast, something declines fast, and it's always like that. So right now it is testing $4 level. It started, natural gas prices started the week on this level, on $4 level, and it's closing the week probably like today. If we don't see any spectacular thing, it will close around here. It will just stretch these, it will just trade on these support level, on $4 level. And after that it's all about Russia and Europe relations. If we just see Russia squeeze, energy squeeze in coming weeks, then we will see another new range, another challenge channel for natural gas. And for a long time the channel was just the beginning of December, and until the end of December the channel was between 3.60 and $4. And now if the energy price crisis goes on with Europe and Russia, there will be more demand from Europe to US natural gas, and the new range will be $4 and $4.40, something like that will be the new channel for natural gas. We will see next week, and especially Sunday opening is important for natural gas. But if Russia just decide to let the flow of the gas go on, then we will see the prices going down again into its original channel. We will see. All right, let's look at our last chart. All right, our last chart is Canadian dollar and Japanese yen. As you can see here, Canadian dollar is just gaining momentum against the Japanese yen. Japanese yen has Japanese Bank of Japan has issued the biggest stimulus package at the end of November. I'm just repeating this one so much, I know, but many people don't just realize that one. Japan is just trying to make its value valuated, not so much, but a little bit. It doesn't want to go higher and higher. It just want a competitive currency pair. That's what their plan. All right, and also Canadian dollar, it's rising. Reason is strong oil prices. When we just hear the strong oil prices, Canadian dollar always rise. But right now, oil prices is testing, and it has tested $82 and then just declined to $80 again. And right now, it's strike again $82. And if it cannot hold the gains, we will see a decline from that level to 75, at least $75 level. When we just see that one, the support line will be something, a cliff going down. So it has trended higher and just went up, but it couldn't go further and declined, and the support level has worked. And now, as you can see here, it's just trying to go above, but oil prices, if it cannot manage that one, it will just go under that one until first level is 90 level. From this level, we may see a decline in Canadian dollar in Japanese yen. Thank you so much for watching us. We will be together on more news this afternoon when we close the week. Have a nice and profitable day. Bye.